How are you doing? Welcome back to my diary. If you're new here, in this space, I talk about forex related stuff, the mistake I've made, and most important, the lesson that I keep making every day so that I can share with you. If you find this video very interesting, kindly hit that subscribe button, comment, tell me what you think about the video, and let's grow together. In today's video, I think I should be doing something like the lessons, like whatever I've been learning. But during this time of the December holiday, I want to be doing the lessons I've learned along the way. Okay. Now, in today's video, I want us to check about the market structure because sometimes we do assume these things. Okay, and you have to watch the whole video because I have a pair that I want us to be looking at. So have an analyzer pair, and you can just go and watch that pair. If you have already understood, then you can just find an entry and you can buy or sell that market. So you have to watch the whole of this video so that you can understand my thinking behind the analysis of that pair. Okay, so when you come to the market structure, I know people they do assume that they know what market structure is because we are told markets we have a bullish market and we have a bearish market, because at the end of the day we are told always follow the trend. The trend is always your friend, but do you know how that trend is created? Because in so many cases you find the market is moving upward, it is moving downward, and you are told you just have to zoom out and find where the market is heading towards. If the market is heading towards the upside, then you call that a bullish market. When the market is heading toward the downside, then you call that one a bearish market. And when the market is ranging toward a certain zone, the market is just stuck at one place. Like let's say for example here, let's say for example the market is ranging toward this area, it is neither going up or downward, then we call that arranging channel. But in this case, at least you have an idea. Let me just use a line chart so that you can understand. You see, this is a very good example of arranging market where for a long period of time the market was just in one place. When I say in one place, it doesn't mean that the market is not moving. Yes, it is moving, but not that much. But at the end of the day, that is how arranging channel looks like. And if you are told we want to see a bullish market, that is where we see, you see how this market has been moving like around this area. The market was very much buying. The market was buying for quite a long period of time, and now we call that one as a bullish market because it was creating high highs and high low. But we'll come to that one. And if you're told you want to see a bearish market, it is still the same thing. You see how the market was selling around this area. So those are good example of a bearish market, a bullish market, and a what? And a ranging market. Those are the three types of market that at least you have to have an idea of what is happening in the market. Okay. So after you have already known the three types of a market, you have to understand how are these market created. How do we know that the structure is being broken toward the upside or toward the downside? Let me use a simple example of a bullish market where we have a market that is going like toward the upside. And I keep saying, if you have been following me for a long period of time, you already know by now this language. You know, we speak this the moment you understand A is A, you cannot switch to A is B. No, it is just A. There's no A will ever become B. So you have to understand this language. You keep on repeating because the more you repeat, the more you understand, the more you know this thing is called this name, then there's no need of finding another fancy name. It is still the same thing. So let me show you how a bullish market, how the structure of a bullish market is created. Why is my drawing misbehaving? Let me try again. This is a good example of a bullish market. Don't know if you can see now clear. And in this case, when I say the structure, where do you find the structure? You see these elbows here. You can say the triangle. You can say sharp corners. whatever you want to say, these are the structure that you want to see in the market. And in this case, if you can just look at this drawing, where do you think our structure are being broken? Are they being broken toward the downside? You can just comment, tell me what you think before I give you my answer. Because the moment you start speaking, the moment you start commenting, it is now easier for me to know you've already understood what I'm trying to say. Okay? Can you see this structure? This structure, they are being broken toward the upside, because this structure, you see here, around this area here it is, the moment this structure has already been broken toward the upside, it will come and retest, then it break toward the upside again. And that is how a structure has already been broken toward the upside. If you are heading down, it is the same thing. The best thing about this about trading is that we keep on repeating the same thing, unless you are doing the wrong thing, but we are repeating the same thing. And you can see the structure here, they are being broken toward where? The downside. Now the structure, if the structure is being broken toward the downside, we are creating lower low and lower high. If the structure is being broken toward the upside, we are creating lower high, high and high low. So this is high because it is higher than this one, and the moment this structure has been broken by this one, we have a new lower high and lower low. Okay, if it is on the low, on the downside, then you have lower high and lower low. I don't know if you're getting confused. If we have a bullish market, we must have high and high low. That is how a bullish market is created. If we have a bearish market, then we have lower high and lower low. So it is very much impossible for you to have a bullish market without creating high highs and high low, and very much impossible for you to have a bearish market without lower high and lower low. At least that one now should be the very basic thing that you need to know for you to understand how the structure of the market is doing. Yes, you can be having a bullish market, but the market at that time, it is retracing. Now when you say retracing, the market now, if for example, let's say this is a weekly market, yes, we know it is bullish, but at one point, before it continue to go up like this, it is retracing. It is creating a new lower high. No, it is creating a new high low, because you see this high here, we want to see a new high low as long as it does not violate the last structure. So you see this retracement here, this is why we are saying the structure. So even if you know the market, yes, it is bullish like this, you see the market was retracing. This retracement is what we call, these structures are being created. Do you now understand what I'm trying to say? Like, you can just have this whole thing here, this retracement. You can see the market was retracing around this area. You see now this retracement are what we are calling the structure. How are those structures created? As much as we know the market is bullish from the higher time frame for the longest period of time, retracement is always a must for each and every market. The market at one point, it will breathe. Okay, so that is why we have to say, even if you know the market, yes, it has been retracing, at one point the market has to create this structure, and this structure are what make us know, are we supposed to be buying the market, or are we supposed to be selling the market? Have I made my point clear? Do you have an understanding of how the market now is created? Do you now understand why we keep saying this is a bullish market, this is a bearish market? Because we have this structure. They keep on creating high highs and high low. Each and every point, each and every triangle, it simply speak volume, and the higher time frame will always speak volume. Remember, for example, if this is a weekly time frame, for it to be created, of course, it has to take quite a lot of time to be created, compared to the daily time frame and the 4 hour, because each and every candle, it represents a whole day, a whole 4 hour, a whole week, a whole month, a whole year, depending on the market that you are looking at. Now let's go and see the chart, so that at least now you can have an idea of what I'm saying before I tell you the pair that I'm looking at. Look at this chart. We are using the line chart for easy understanding. Remember the line chart, it will not capture the wicks. We are just capturing the body. That is why you can see this line around this area, because for the line chart we don't have the wicks, but when you go to the candle, now you find the wicks around this area. So we are using a line chart for easy understanding. Now, which type of a market is this one? Is it a bullish market? Is it a bearish market, or is it a ranging channel? We are starting to analyze this chart from here so that we can understand more about the structure of the market. From my perspective, if you have already answered, well and good. From my perspective, this is a ranging channel. Okay, this is a ranging channel because the market is reacting toward this area. Of course, if we zoom out, we know the market has been buying, but we cannot concentrate on the past data that much. We want to concentrate on the recent data that is happening now, because we want to know, do we enter the market or do we exit this market? So you can see this market is ranging around this area. Now that we know we have a ranging market, where do we find our point of interest? I've said we are using the line chart. That is why you cannot see the point of interest being around this area, because when you go to the candles, you'll find the wicks. You see how the market is ranging toward this area. So where is our point of interest? This is where our point of interest is, because whenever we have this market around this area, you see how the market is reacting. Another point of interest around this area, it didn't tap, but at least the market at one point it tried to go to that area. When you go to the lower side, this is the same area the market is reacting towards, and you can see this is where the current market is. So what does that tell you? It tells you something is happening in this market. And when you have this type of a market here, for me to know this my point of interest, what do I call it? Does it have a name, or am I just saying it is a point of interest? You can just watch my other videos so that at least you can have an understanding, because at the end of the day, I just want to give you a simple analysis of this pair. Uh, on this point of interest, this is where I call it resistance, and this is the support. And whenever we are at support or at resistance, we are supposed either to buy the market or sell the market. Okay, so let's go to the weekly time frame so that we can start analyzing the market, so that we can know what is the weekly structure saying, what is the daily structure, and the 4 hours saying before we go to our point of interest. This is the weekly time frame, and this pair, this is Euro card. By the way, this is Euro card on the live market. On the weekly structure, what do you think the market is doing? At one point, this is where the market was, and we wanted to see this market breaking toward the upside, so that we can continue doing what we can continue buying the market. But whenever the buyers came to around this area, you can see how the sellers have been pushing this market toward the downside. They came here, they broke our support, they broke our support, and after so many weeks, after so many days, you can see the market has already gone again to our support. And remember, the moment this support has already been broken, the moment the sellers are below here, it becomes our resistance. But now you can see the buyers came in, pushed the market toward the upside, and now they are reacting around this support and resistance. But because we are already on the support and resistance, we don't know where the market wants to go. So you cannot be glued to one time frame. Okay, that is why we have daily and the 4 hour to tell us more information of what is happening in the market. So from the weekly time frame, my perspective, the market is bearish, because this is the last structure the market was, and it has not broken. This is the weekly time frame. The market has not broken around this area. Anything in between here, it is noise. Anything in between here, we just call it noise, unless the buyers or the sellers they come and break either downside or upside. Then you can say we are buying the market or we are selling the market. But in between that, we call it noise. But we cannot keep on relying on the weekly time frame. That is why we have to go to the daily, so that we know, are we still buying or are we still selling. When you go to the daily time frame, this is how the daily time frame look like. Now that we know the weekly we are bearish, for the daily time frame, Where is the last structure? This is the last structure the market was at. The last structure, this is where the market was, and you can see the market broke toward the upside. So from the structure already we know we are bullish. So weekly we are bearish and daily we are bullish. Can we still enter this market? We are 50-50. We still have to go to the lower time frame to know what is happening into this market. Can you see how this structure? I've already done a whole video about the structure of the market. So if you don't understand, you can just go back and watch that video. Maybe you can connect with what I'm trying to say. From the daily time frame, you can see now, oh, the market is bullish, but the weekly time frame is telling us to sell. Now, the reason why I'm saying the weekly we are bearish, it is because the market is retracing. That is why we are seeing this retracement on the daily time frame, but the structure of the daily has been broken toward the downside. Now it is retracing. I can say the market is doing a retracement. Sorry, the market is doing a retracement, or the market want to continue going down. But as of this moment, this is what I think, my analysis of what the euro card is doing, and the market can do anything. It is not a must for the market to do what I've just said. I'm just thinking aloud so that I can get an entry into the market. Let's go to the 4 hour. What do you think is happening to the 4 hour? It is easy. Of course, now you know the 4 hour market is selling. So we have weekly we are bearish, daily we are bullish, and 4 hour we are selling the market. What do you think we should be doing at this as of this moment? Are we supposed to buy the market, or are we supposed to be selling the market? Remember, by now you must have your point of interest. Where is our point of interest? This is where the market is reacting to. So if I'm to buy this market, I'll have to wait for the 4 hour to shift because the daily is retracing. I'll have to wait for the 4 hour market to shift and start heading toward the upside. Then I can start buying the market because the market is already at support. Can you see? The market is at support. And whenever we are at support, you're not supposed to be selling. We should be thinking of buying the market. And if I'm to start selling the market, then I'll have to wait for this support to be broken, come and retrace to retest, then I can start selling the market. But as of this moment, we don't have a clear entry, but we know the daily time frame, because forward is easier than the daily to be printed. So I can just wait for another 4 hour candle to see how the market is reacting. Then I'll have an idea of what the market is doing. Do you see how I've just analyzed the market in a simple way? If it is hard, you don't have to make it hard for you. You don't have to continue analyzing that pair. You can just switch to another pair. But if you have an idea of what is happening, you just have to analyze, let the market be, come back, okay? Come back and check if ever the market is doing whatever you have already said. So that is why I'm saying for the 4 hour, because the 4 hour takes quite it is not that long for it to be printed. You can just wait. This is why I'm saying on the daily you can see the market, yes, it is retesting, but we don't know where it is most likely to retest to. Maybe around this area, but as long as it does not break the last structure, we can still be patient. So I'll just stick to the fact that I don't have an entry, but I'm open. If ever the buyers want to buy, I will buy. If they want to sell, I will still sell. From the candle, can you see how the market looks like? This is how the daily market looks like, and we can just wait. You don't have to be buyer, like you have to be on one side. No, if it is to buy, I'll have to wait for the 4 hour to align with the daily, then I can buy the market. If it is to sell, then I'll have to wait for the daily to align, then I'll wait for the retracement. And then I can do what? I can start buying the market, and that is the easiest. So ensure you check on the euro card. We might have an entry either on the buy side and on the sell side. So you don't have to be, I just want to sell. You must have a reason, okay? You must have a reason for you to enter the market before you say I just entered the market. So I really hope you have a pair to look at the whole of this week, and I hope you have understood what I'm saying.